Well, tax season can be confusing for many people, including those who made those sports bet and won. You may be unsure of where to start, so 2 Wants to Know is calling in the experts to help. Today, we're joined by Mark Stieber, Chief Tax Information Officer for Jackson Hewitt Tax Services. We appreciate you joining us. So, of course, the IRS opened up everything this week so that people can start filing their taxes. There are certain pieces of information that you just have to file your taxes.
Well, it's everything you need to file a complete and accurate tax return. A lot of people feel as if they get it close, or if I round up or get it kind of right, the IRS will figure it out on the back end, and that's just not right. Everything needs to be accurate and needs to match to other data in the IRS system. Things like your wages, 1099 income from self-employment or side hustles. Your name and social security name match, especially if you've been married or divorced, or you got those complex kid names. So make sure that you have your social security cards. Those kind of help. And also all the documents related to your year of income. And I also like to throw on top of it last year's tax return. That's a good tickler sheet for your pro to kind of see what you need to be looking for and what might be there and what might be missing. And then a good robust discussion on whatever else happened in your year. That's what you have to get a complete and accurate, error-free tax return with the biggest tax refund.
Okay, so that was my next question, because a lot of people get really impatient with waiting for all those tax documents. I know I got an HSA document like in March. And so what happens if you don't include everything?
If you don't ever include everything, that's just a recipe for risk and disaster, because if the IRS is looking for it and you didn't include it, and that includes things like cryptocurrency or side hustle income, selling those Taylor Swift tickets and getting a 1099K, you're probably going to get a letter of inquiry. It's not an audit like a lot of people see on TV, but it will be a, hey, we're showing this thing. Where is the thing on your tax return? Do you have an explanation? Was it an error? Did you leave it off on purpose because it's not yours, or did you just omit it? And then you need to explain it. And if it's an income item, there's usually going to be a tax assessed with it, maybe some penalties and interest. So you want to make sure you're complete with all of your activity. And the IRS has frankly gotten a lot better at getting those information statements from banks, employers, people who transfer money using third-party platforms, and all the like. So leaving it off or guesstimating it, that's not a good idea to go do that, because if it's not exact, and I mean exact, you're going to get a question.
Okay, yeah, because they are going to get the paperwork too. Okay, so this year North Carolina joins the IRS Direct File program. Let's talk about who's eligible to use it and why they should maybe use it.
Yeah, this is the year number 2 of that experimental pilot program with the IRS, where the IRS is creating their own tax software to do taxes for the IRS. So you use that to calculate your taxes and how much you owe to the IRS. Now, it's really for a test group of candidates, lower income with very, very simple tax returns. But this is the second year of the pilot if you want to go do it yourself and use IRS software to calculate the money you owe the IRS.
All right, let's talk about some common mistakes. And I know some people would say, oh, I would never make the mistake of misspelling my child's name or putting the wrong social security number, but it happens.
Oh, it happens. People owe money to the IRS and forget to pay. There's no shortage of mistakes. And that's why I'll say this is another best practice. Start early and get organized. You don't need an enormous amount of complexity with that. The shoebox or the envelope works. Take your time. Make sure your data matches. I recommend a Tax Pro, even though we have self-prep software at Jackson Hewitt. But it makes a lot of sense to have a second set of eyes looking at what is today an entire volume of data. You were talking earlier about gambling, but it's gambling. It's cryptocurrency, it's side hustles, it's all the other things that people have going on in their lives, and you need to be accurate, because this is not just some estimate that you're doing, for a work budget or, you're spending. This is with the IRS, and they've got a lot of data, and your data needs to match their data. So go slow. Don't wait till the last minute. Don't do your taxes on your smartphone at the red light, even though you think they're simple. You can get into trouble a lot of different ways. The biggest way is those self-inflicted mismatched data elements.
Okay. I think a lot of times people miss tax credits, like for kids and for things like that. What do you want to make sure that people are aware of this year?
Yeah, there's about a dozen tax credits, with even more coming online from the Inflation Reduction Act and some of those green credits if you bought an alternative fuel vehicle or did home improvements. But the Earned Income Credit, a hugely enormous 50-year-old program, 1 in 4 Americans still fail to claim that. And it's not just a credit for low-income people, moderate-income people. Child tax credit, another one often misunderstood, especially when you have a complex family structure or shared custody. The other dependents credit, if you've got people in your house spouse that are family members you're taking care of, dependent parents, for example. The other dependent credit is a nice one. The saver's credit for people who put money in a 401k or an IRA. Often overlooked. And then there's a dozen different benefits related to education. And here's the thing your viewers need to know. If you leave an item or a credit or a benefit off your tax return, the IRS is not going to catch it on the back end and send you more money. That's not how it works. They'll come after more money, but they're not going to increase your tax refund just because you got quick and left off the earned income credit. Perhaps you had shared custody this year and you didn't take the child credit, or you bought some energy efficient windows for your house and you didn't take the energy credit. You leave it off, stays off.
Yeah, that is a really good point, because the IRS definitely makes sure they get the money that they're owed, but they're not going to tell you if you made a mistake in their favor.
That is exactly the truth, and it's always been that way, and that's not going to change, even with more funding or more staffing or whatever modernization. The IRS is to make sure you paid your money, not that you got all your credits and benefits.
All right, we want to make sure everybody knows the deadline for tax day. It is April the 15th. I know sometimes it changes from one day to another, year to year, because of certain things, but it is April the 15th. That is your deadline. Thank you so much for joining us. We appreciate you, Mark. We'll be right back.